Hello champs! Hope you are doing amazing. In this video, let's make a wonderful discussion of January 2026 ICAI CA Foundation exam paper along with its suggested answers. So in this session, what we will observe is the questions which have been framed, concepts covered, how it needs to be solved and presented. For your benefit, I've also went through the examiner's comment which definitely becomes a game changer for you to inculcate so that what mistakes have been committed by Jan 2026 aspirants need not be done by you again. And this also gives you that perspective how the evaluators will consider or would think and the student's mindset in that exam environment. So, after this complete session, what is your job is to completely practice once. That only gives you the time for what you have invested in seeing this video, guys. So let's begin this session with the same spirit. So as you are aware with respect to the question paper pattern, question number 1 will always be compulsory. This is common in any of the level of CA exams. And out of the remaining 5 questions, you need to attend 4 where 1 would be available to you as choice. Each question will be of 20 marks. That is, I hope all of you are aware. And observe these minute things which most of the students would miss. They have clearly emphasized in the paper itself. What does it tell? Wherever necessary, suitable assumptions should be made and disclosed by way of a note forming part of the answer. Most important thing, working notes should form part of your answer. So these are all minute stuff which most of the students tend to ignore or miss out, because ultimately here they are not expecting a neat presentation. They're just expecting what would be the base or what would be the calculation to arrive so and so value. So these all becomes part of your main answer. So let's begin with question number 1. As we know, the first part would be true or false, which is the most favorite and the most easiest scoring part. So let's observe the questions what has been asked in Jan 2026 exams. So each question will be of 2 marks, wherein 1 mark for your answering whether it is true or false, and then the another mark will be for the reasoning which you provide. So first question, money spent to reduce working expenses is revenue expenditure. So the solution for this will be false. Simple reason being, any expenditure which helps in reducing working expenses will not be in revenue nature, because it definitely brings down the amount of spend which the business has to make. So this will be a capital expenditure. So your answer would be false, and the reason is what I mentioned. I will also show you what is given as per the ICAI suggested answer. Next, transactions regarding the purchase of fixed assets on credit are recorded in the purchase book. Remember, purchase is one of the subsidiary book. This is with respect to purchase of an asset, and if it is done on credit, it will not appear in the purchases book, because only goods purchased on credit will be written in purchases book. This will be entered in journal proper. So your answer would be false for this. Second, so this was false and this is false. Third, a present financial obligation of an uncertain amount which can be measured reliably by using a substantial degree of estimation is termed as a liability. This is clearly pointing out to the definition of liability. Along with liability, there was one more thing which was provision. Whenever you come across the word that is of estimation, just understand one thing, guys, because the liability definition and provision definition is quite similar. You observe the similar wordings being framed there. So how do you distinguish? First, logical understanding is required. Meanwhile, to identify, provision is something which we do on an estimation basis, because there we cannot be accurate. It differs from business to businesses. For example, provision for doubtful goods as such. So therefore, this is not a liability definition. The statement given is false, and this is for provision. So the answer for this also is false. Next, nominal accounts are kept under single entry system. So this is coming from a chapter where accounts from incomplete records, chapter number 9. where you understood the different types of maintaining books of accounts. There, nominal accounts are kept under single entry system is not at all a correct statement. The answer for this will be false. Under single entry system, we will just find cash account or any some personal accounts, and there would not be any nominal accounts maintained. Next, winding up of LLP may be initiated by tribunal if the LLP has failed to submit the statement of accounts and solvency or the LLP annual returns for more than 3 consecutive financial years with the registrar. See, most of the students will ignore such theoretical points, but you observe these importance. 2 marks weightage is given, and definitely this is not a lesser marks at all. This is coming from your introduction to partnership and LLP accounts. That is unit number 1 of your partnership. In that particular unit, there is a clear provision mentioned about the maintenance or that is submission of statement of accounts and solvency. And the number of term mentioned there is for 5 consecutive financial years and not 3. Hence, the answer for this will also be false. Next, as per section 52, a company may utilize the securities premium account to write off its preliminary expenses. Section 52 of the Companies Act gives us the 5 specific uses of securities premium, and one amongst those is to write off its preliminary expenses. Hence, the given statement is true. So these were the discussion of your true or false. Let's observe what is the ICAI's answer for this. See, first one, that is money spent to reduce working expenses was revenue. This is false because this is in capital nature, and the reason would have granted generated long-term benefits. Then purchase of fixed assets is again false because that will not be recorded in the purchases book. Then again, it is not a provision and it will be, sorry, it is not a liability, but it is termed as a provision. Next statement is again false, wherein generally, as I mentioned, cash book and personal accounts will be maintained. Nominal will not be maintained under single entry, it will be just maintained under the double entry system of accounting. The next point was about presentation submission of statement of accounts and solvency for the LLP along with annual returns, and it was for 5 consecutive financial years. Hence, the given statement was again false. The next statement was true because preliminary expenses, to write off preliminary expenses, securities premium account balance can be utilized. So I hope this was all comfortable. Now, in this case, there was an examiner's comment wherein the students definitely didn't have the ability to give the proper reasoning. Some students were clear in presenting whether the solution was true or false, but they failed to provide proper reasoning, the logic behind why the given statement was true or false. Here, this also presents as one of the important aspect that you should have a proper clarity on the concepts which you interpret, especially in points like this one, wherein you find the similar wordings being mentioned, and most of the students tend to commit this mistake as considering this as true. I hope you're understanding the direction in how you need to prepare to approach these true or false. Because as I mentioned in the beginning, this is a sweet spot, guys, where you can easily score 12 marks provided such conceptual clarity with respect to the statements given should be very, very precise. Done? Yes. Let's move to the B part of first question. What are accounting standards? Briefly explain the main advantage of setting accounting standards and their limitations. Just to break down what is being asked, you're just asked the definition of accounting standard, and then they're asking you the advantages and limitations, advantages and disadvantages of accounting standard. So this is the simple requirement. This is asked for 4 marks. Let's directly jump into what points need to be clearly mentioned. See, guys, this is the expected answer. We cannot expect the students to reproduce the same thing which is given in the material. So just observe the usage of keywords. If you utilize that in your answer, your job would be done. Simple question. They're asking you the definition or meaning of accounting standards and then advantages as well as limitations. So let's observe what is given. Accounting standards are written policy documents. Why am I highlighting? These are all must used words in your answer. Issued by the expert accounting body or the government or other regulatory body covering the aspects of four things: recognition, measurement, presentation, and disclosure of what? Accounting transactions and events which is presented in your financial statements. So this is the simple meaning of accounting standards. It is just written policy documents. You have to mention issued by whom and this is regulated for what. That's it. Clear? So use four keywords. There is recognition, measurement, disclosure, and presentation. And this is with respect to accounting transactions and events in the financial statements. So this was about accounting standards. There was other two parts, that is to explain about advantages and then limitations. Advantage. The main advantage of setting accounting standards is that the adoption and application to ensure why are we supposed to look at the work structure of accounting standard is to ensure that there is uniformity, comparability, and qualitative improvement for what? In the preparation and presentation of financial statements. So this is the main of your advantage. That is how we begin. Apart from that, there are other few points. These standards will reduce to a reasonable extent or eliminate together. What would they eliminate? They will eliminate some confusions with respect to the application or treatment of certain items. See, confusing variations in the accounting treatments used to prepare financial statements. Next, there are certain areas where important information are not statutorily required, means it is not required as per law. But due to compliance of accounting standards, it informs the users a clear picture about what is being requisitely followed. So, this standard may call for disclosure beyond those required by law. Then, the application of accounting standard would, to a limited extent, helps in a greater comparison. Now, if I have to compare financial statements of X company along with Y company, there should be a common accounting standard which becomes applicable. If the bases are not same, definitely it is not comparable in nature. So that is why this becomes easier. And if there is financial statements which need to be considered of a country, different companies operating in different countries, this is also considered in this particular aspect. So these are some advantages of accounting standards. Then there are two limitations. There is difficulties in making choices between different treatments because some accounting standards can prescribe different accounting treatments. It becomes difficult for an accountant to make a clear judgment. Then accounting standards cannot override the statute. That means accounting standard cannot go beyond what the law prescribes. Law is the ultimate authority. So accounting standards cannot override the statute. So this was all about accounting standards, advantages and limitations. Next. Next question is about journal entries. Mr. Vijay has entered into the following transactions during the month of December 2025. You are required to journalize the same in his books of accounts. So they're asking us for journal entries. So this is integrated with your GST transactions. So let's understand this precisely. First, purchased goods from Ramsons for 20,000 at a trade discount of 10% plus CGST and SGST at 9% each. 10,000 was paid immediately and the balance is payable after 2 months. So first of all, normal purchase entry. So this is goods purchased on credit. So the entry would be purchases account debit to Ramson. But there are some additional adjustments. There is GST levied on such purchase transaction. So if I also consider GST, it again is the nature of my expenses. So I will debit. So the entry for this will be purchases account debit, input CGST, input SGST to Ramson. There is some part which is also paid. So when some amount is going, so we will use either bank or cash. Understand one common thing here, guys. Whenever you come across the payment or whenever you are receiving, make sure we use both cash or bank, even if the question is telling us received or paid in cash. Because as we certainly know, in the practical world, there are more usage of banking channels rather than cash. Because The government itself has regulated this to eliminate or to reduce cash transaction to minimal. So that is why it is always logical to use either bank or cash. Now let's understand how the amounts have been arrived. The transaction amount was for 20,000 and there is a 10% trade discount. So on 20,000, if I apply 10%, there will be 18,000. So 20,000 minus 2,000, that is 10% on 20,000. On this, I will charge GST. Make sure let's not commit this mistakes and not apply it on 20,000. So the rate of GST was 9%. So on 18,000, if I apply 9%, it is 1,620 each for CGST as well as SGST. And then to Ramson's, to bank. Remember the question clearly emphasized 10,000 was paid. So we will take all the total of debit side and then pay 10,000. The residual will be credited to Ramson's. I hope this was clear. And then give the narration being goods purchased from Branson's CGST SGST payable at 9% each. Now in this, what was the examiner's comment in the entire question? Examiner have clearly commented telling that students missed writing input CGST. That is, they've just written CGST SGST, but they are clearly specific that you need to mention whether it is input or output. So make sure you don't miss out on this point. This was first transaction. Next, goods costing 10,000 were withdrawn for personal use. This, if I have to write as a normal journal entry, the entry would have been drawings account debit to purchases. Since goods are not present in the business, whatever GST paid on those goods purchased should also be reversed. So your entry will be drawings account debit to purchases to input CGST and to input SGST. The drawings amount here is 10,000. So we will write this for purchases and charge GST along 10,000 to purchases, to input CGST, to input SGST at the GST amount. The total will debited to drawings. Being goods withdrawn for personal use and input CGST, SGST debited at the same time of purchases reversed. Here the word which you clearly have to use is reversed. Next entry, purchased machinery for 52,500 including IGST at 5% by issuing a check to the supplier. This transaction is simple, guys, but one simple calculation which students would generally miss out is, since we are observing that the first two transaction was GST separately applied on the transaction amount. But what is the different from this point here is, here whatever the transaction amount you are observing 52,500 is already including GST. But we need a breakup. First we need to find out the gross value and then GST amount on that gross value. This is nothing but the total. So how to calculate this? 52,500 if you observe is representing 100 rupees plus 5% on this. So this is 105. Yes, I want the value for 100 because I want the gross value. How to find this out? 52,500 into 100 divided by 105. So this will be 52,500 into 100 divided by 105, which is nothing but 50,000. This is 50,000 and the GST rate which is given is 5%. So 50,000 into 5%, if you observe, this is again 2,500. So what will be the entry? This is machinery purchase. So on purchases there will be input GST. So here it is IGST. So the entry would be machinery account debit, input IGST account debit. 2. This was by issuing a check to the supplier. So to bank. See, machinery account debit to input IGST to bank. Whatever we found out, how we got that 50,000, you should present this as a working note. See, the machinery is purchased for 52,500. This was representing 105. So we need how much it is for 100. So that will be 50,000. This need to be presented as a working note. I hope the transaction is simpler to all of you. Next entry. Goods costing 3,000 before trade discount of 10% were issued to Vinod. Such goods were purchased by paying CGST and SGST at 9% each. So let's understand the transaction first. Goods is costing is given. This was before trade discount. This was returned to Vinod. So when we are returning, that means this is a purchase return. So what will be the normal journal entry? This will be Vinod's account debit to purchase return. Since there was GST which was paid on the purchases, the same would also be reversed. So Vinod to purchase returns to input CGST and input SGST. So 3000 was before trade discount. Let's observe how this is written. See, Vinod account debit to purchase return. The purchase return amount was for 3000, but there was a 10% discount. So the transaction amount will be 3000 minus 300, which is 2700. Again, GST will be considered on this amount 2700 and 243 after applying what was the GST rate. GST rate was 9% each, so on 2700 9% each, so total 3186 will be debited to Vinod. So I hope the question was comfortable. This GST integrated question is one of the important tested frequently by the institute because this is a very trending topic, and conceptual understanding is what is required by why we need to debit and the respective amounts calculations. I hope the question number 1 was comfortably understood to all of you guys. Moving on to the next one. Question 2. Mr. A's trial balance as on 31st March did not agree, and he wrote off the difference to the profit and loss account for that year. Observe one thing, as in when you read the question, this was the data given as on the year end, and they are also mentioning that it did not agree, so the balance was written off to P&L. Next year, he engaged the services of an accountant who, after a close scrutiny of the books of the for the year, observed the following errors. So your favorite question that is coming from rectification of errors. Observe the weightage, guys. This is asked for 12 marks. It is a very interesting question, and it is a similar one which is given in your institute study material as well. So before we go ahead, I will just inform you about what was the examiner's comment in this question. First of all, most of the students have conceptually failed in observing this point that this error was found out in the next year, where he observed the close scrutiny of the books in order to find out the difference. When the books were closed, that is, this is the stage where the errors are identified after preparation of after preparation of final accounts. Understand one thing, guys, we cannot again disturb profit and loss account when there is nominal accounts are involved. So here we bring in a separate account named profit and loss adjustment account, wherein the nominal accounts will be utilized and the rest will be normally operated through suspense account. As per the examiner's comment, most students have missed writing profit and loss adjustment account. So that itself completely communicates to the examiner that you are not paying attention with respect to the requirement of the question, or you might not be aware about this point conceptually. I hope these points need not be repeated from you guys. Whenever you observe it is of next year, automatically this point should strike that when there is nominal accounts covered, we will not use the respective nominal account and make use of profit and loss adjustment account. So let's run through the transaction one by one. Goods worth 5,000 were dispatched to a customer before the close of the year, but no invoice was made. So when there is no invoice made, then there will be no entry. So there is an error of omission. This was dispatched to a customer. So this is normally sale entry. What would be the entry? Customer account debit to sales. Remember one thing I explained you just before, sales is a nominal account. So we will use another account called as profit and loss adjustment account. So your entry will be customer's account debit to profit and loss adjustment 5,000. See, customer account debit to profit and loss adjustment 5,000. Being rectification from non-preparation of invoice. So you can write the narration in a simpler communication of what you're doing with the entire transaction. Next, 3,000 due to Mr. X was omitted to be taken to the trial balance. Understand one thing, they're only giving from the part of X. Due to Mr. X means Mr. X will be your creditor. So when there is creditor, his account will be credited. So there is nothing given with respect to the debit part. So we will route this through a suspense account. So your entry will be suspense account debit to Mr. X. Mr. X is the creditor, therefore we are crediting. The amount is 3,000 and 3,000. Next, wages of 5,000 paid for erection of machinery were debited to wages account. Now observe one thing, guys. This is a revenue expenditure, but sorry, this is a capital expenditure because this is paid for erection of machinery, but they have treated it as a revenue expenditure. First, the wrong treatment needs to be rectified, I mean to say removed or eliminated, and then the correct impact needs to be provided. So what will be the rectification part here? So wages is being debited. It should not have been debited. So this is again a nominal account. Machinery account needs to be debited with respect to such amount. So the entry would be machinery account debit to profit and loss adjustment with respect to 5,000. I hope this entry is understood. There is one more point. We have still not gone through the entire question, but as per ICAI suggested answers, in order to help you understand how it is being presented, observe one point lastly. There is one consideration given for depreciation on machinery. So again, we are discussing about the machinery itself. If this wages amount was part of the machinery, don't you think we were also charging depreciation on the same? So that impact should also be taken. The amount is 5,000. 10% on that of charging depreciation will be 4,500. So this complete entry is being integrated. So your complete adjustment entry will be machinery account debit to profit and loss adjustment, which is 4,500, 4,500. I hope this is comfortably understood. And this depreciation part is also mentioned in the narration. See, there is also an alternate way of writing this. First, you can simply write machinery account debit to profit and loss adjustment and then charging depreciation on the machinery. So then the entry would be depreciation account debit to machinery account. Again, depreciation is a nominal account. So that will be P&L adjustment to machinery. Here also the presentation would differ. See, if you just write machinery to P&L adjustment, amount you would debit would be 5,000. And then when you charge depreciation, there would be 500. So net the impact will still be 4,500. Therefore, here the IC has presented one single answer. I've given you the two perspectives of how to solve this. Clear? Next. Purchase of goods from Mr. R for 20,000 was omitted to be recorded. Again, there is error of omission. So the entry would here be purchases account debit to Mr. R. Remember, purchase is a nominal account. So the entry here will be P&L adjustment to Mr. R. 20,000. Clear, all of you? Next. Cash payment of 5,000 to Mr. C was posted to the credit of his account. Cash payment of 5,000 to Mr. C. So what should have been the entry? C's account debit to cash. So here what they are telling is it was posted to the credit of his account. Observe one important thing carefully. There is error only with respect to one part of the account, which is Mr. C. C's account should have been debited, but his account has been credited. Sorry, yeah, his account has been credited. How do we rectify this? We need to first cancel the credit which is taken off 5,000 and then post it on the debit side. Remember one thing, guys, whenever we are cancelling first, there is one effect, and then for the correct debit, there is one more effect. So the total amount which we need to consider here will be 10,000. I hope you understood how this is being arrived. So here the error is only with respect to Mr. C's. So the entry will be Mr. C's account, which should have been debited, we are debiting to suspense because there was no error with respect to the cash payment. As I mentioned, the amount here will be 10,000. How is this 10,000 coming? As I repeatedly telling, C's account is credited, but his account should have been debited. 5,000 is the amount. So 5,000 on the credit side will get cancelled. If I have to bring 5,000 more on the debit, there is 5,000 also cancelled on the credit side. So the total amount needs to be considered would be 10,000. Clear? Yes. Next. Purchases of 15,390 was wrongly posted as 15,930. Now first let's understand the difference. 15,930 minus 15,390. So there is 540 rupees shown more. Now purchase will have debit balance. So they are showing more of a debit balance. It needs to be brought down. Remember, purchases is a nominal account. So we have to use profit and loss adjustment. This is again a single omission. which is happening in the purchases book. So the entry will be routed through suspense account. So what will be the ultimate entry? Suspense account debit to profit and loss adjustment. How are we getting this? 15,930 minus 15,390. I hope this is clear. Next, goods worth 16,000 were sent on sale or written basis to a customer and entered in the sales book. Understand one thing, when the goods are sent on sale or written basis, it is still not a completed sale, but they have entered it in the sales book. At the close of the year, the customer still had the option to return the goods. That means you cannot still conclude it as sale, because when the customer has the option, you cannot clearly conclude whether it was a sale or the goods are coming back to you. Gross profit margin was 25% on sales. Now, understand one important thing here, guys. When the goods are not yet considered as sales, you cannot first of all consider it to be your sales. But they have recorded it as sales, that needs to be corrected. On top of it, when there is still an option to return the goods and the goods are not in your premises, understand one thing. How do we account this? Carefully observe the journal entry here. Let's also understand the logic behind this. The amount, transaction amount was 60,000 and there was a gross profit margin of 25% on it. Remember in inventory chapter, because the concept is covered in your inventory chapter, we will record the inventory at cost or near net realizable value, whichever is lower. Because here we cannot record it at selling price. Simple logic here is we cannot expect or make profit from our own stock. So that happens only when the sale is generated. But when we are maintaining it in our books of accounts, we will record it at cost or net realizable value, whichever is lower. Now, since it was recorded as a sale, it is not actually sale. It should be present in your business. When the goods are taken in your business, which was shown as a sale, now rectified, that means your inventory balance will increase. Remember, inventories are your assets. When it increases, we will debit. So the entry here will be inventory account debit. Remember, as I told you, you cannot show this at selling price. So they have given us the profit margin. 16,000 was the selling price. If I have to find out the cost price, I will take out the gross margin inward. So on 16,000 is a selling price. If I take out 25%, I will get 12,000. I hope this is clear. And this 16,000, because I considered it as sales, the entry would have been customer account debit to sales or debtors account debit to sales. So I'm just reversing by crediting the customer. There was profit involved, so that will be routed through profit and loss adjustment 4,000. Observe the narration also, so you will have a proper clarity now. Being the customer account credited for the goods not yet purchased by him, because when it was considered as sale, we would have debited. So here we are crediting cost of the goods debited to inventory and profit debited to profit and loss adjustment account. I hope this is comfortably understood. Next, a return to a creditor 550 was entered in return inwards book. However, the creditor's account was correctly posted. A return to a creditor means this will be your purchases return. But what they have done is they have shown it in the sales returns book. So whatever entry is made in the sales return needs to be corrected, because they are clearly telling that creditor's account was correctly posted. So sales return will have a debit balance. So when we cancel this, it will be credited. Remember, here the sales return will be routed through which account? It will be routed through which account? Again, profit and loss adjustment. The creditor's account was correctly posted. So the entry will be debited through suspense account debit to profit and loss adjustment. Here again, if you observe the same treatment, the amount covered is here 550. 550 was debited. First I have to cancel that. So 550 there. Correct amount 550 needs to be credited. So the total amount which we need to take here is 1100. I hope this is clear. Later, most two important entries where the examiner have clearly emphasized that most of the students have missed this, and that is where they have failed to score the complete marks. Whenever we have such profit and loss adjustment and suspense account, and especially the transaction was pertaining to previous years, that is errors was related to previous year transactions, and you are rectifying it in the subsequent year, make sure the accounts opened needs to be closed and transferred to the proprietors or the business owner's capital account. So in this, we have made use of P&L adjustment, and we have also taken suspense account. These needs to be completely, the balance which is there in need to be completely transferred to capital account of the person. Here in this question, it is of Mr. A. So for this, it is always better to prepare this as a ledger which becomes part of your working note. So one, there is profit and loss adjustment, and the other there is suspense account. What entries are presented here? If you have understood the journal entries, we have debited P&L adjustment somewhere, credited some, and debited suspense, credited somewhere. All those entries will be presented here in the ledger. And ultimately, if you observe, the closing balance will be transferred to A's capital account, and in suspense account also the balancing figure will be transferred to A's capital. So this entry needs to be presented as your journal. That is when your complete entry is valued. A's capital account debit to profit and loss adjustment because it is coming closing on the credit side. And then for suspense, it is on the debit side, suspense account debit to A's capital. How to fill these values? As I'm telling you, whatever entries, what we understood, just observe based on that entries only, this ledger is being prepared. I hope this was completely understood. A very important question, guys. Good question for practice. Make sure all of these important points, especially not missing these two entries and this working note, becomes very, very crucial to score complete marks. I hope this is clear. Next question. Mehta and Company had the following balance appearing in its books of account as on 1st April 2024. So before we understand the complete story, let's read the requirement. You are required to prepare the plant and machinery account in the books of Mehta and Company for the year ended 31st March 2025. So they are giving us the detail from 1st April. Also show the working for profit of loss on sale and scrapping of the machines. Round off the figures to the nearest multiple of a rupee. So this is requirement of plant and machinery. Along with that, they are asking us few important working notes. Now let's read the complete question. Balance of plant and machinery as on 1st April 2024 is given to us. That is 1 crore 42 lakh and 50,000. Its accounts are made up to 31st March every year, and depreciation is charged at 10% per annum. Under which method? These are all the important markings which you need to consider while you read the question itself, written under written down value method. On 1st September 2024, that is in the same current year, a new machine was acquired at a cost of 21 lakh 20,000, and a sum of 46,900 was incurred on the same day towards installation charges for erecting the said machine. So this becomes part of the cost of the machine. So both will be considered as the cost of the machine. On the same date, a machine which had costed 32 lakh 8500, on which date, observe, on 1st April 2022, was auctioned for 5 lakh 62 500. Read the statement carefully. On the same date means which date? 1st September 2024. A machinery which was worth 32,80,500 as on 1st April 2022 is being auctioned for 5 lakh 62,500. Another machine which had cost 32 lakh 77,500 on 1st April 2023, having become obsolete, was scrapped on 1st September 2024, and it realized nothing. So there is no amount realized from this part. Remember, on 1st April 2024, there are three events happening. First, new machine was purchased. The asset which was present from 1st April 2022 is getting auctioned, and then there is another machine which is also scrapped. For all of these, they are asking us the working to present it in the plant and machinery account as on 31st March 2025. I hope the question is comfortably understood. Now let's understand the working. First of all, in the books of Mehta and Company, plant and machinery, they have given us the balances on 1st April 2024. So asset will have a debit balance to balance brought down 1 crore 42 lakh 50,000. I will just highlight what all elements which we have been discussing, so it becomes very clear for you to also follow up. Next, from 1st April 2024 till 1st September 2024, there is no any such transaction. So we will analyze the entries one by one and make the respective entries. On 1st April 2024, a new machine was acquired at a cost of 21 lakh 20 and a sum of 46,900 was also incurred, considering this as an installation charge. So the total cost 21 lakh 20,000 plus 46,900 needs to be considered as a cost of the machine. So what will be the journal entry for this? Machinery account debit to cash or bank with respect to the amount, that is 21 lakh 66,900, including the installation charge. So in the plant and machinery account, we will post this on the debit side. Observe, to bank 21 lakh 66,900, the same thing which you are also getting on your calculator. And this happened on which date? 1st September 2024. So that is also taken care. Clear till here? Next, there are assets which are getting auctioned and which is getting scrapped. We have to also consider depreciation till date and then record the auction and sale and also profit or loss on the sale. For this, we need to make a separate working note. So first of all, see, this is getting auctioned for 5 lakh 62,500. Means what? You're getting money. So what will be the entry? Bank account debit to plant and machinery. So by bank, we will record this on 1st September 562,900. Before we consider the sale, there needs to be depreciation on this part of the machinery. So we will do the working note for the same. See, calculation of loss on sale of machine. Cost as on 1st April 2022 is given. That was 32 lakh 80,500. Remember the method which was written down value method. This was from 1st April 2022. So we want the value as on 1st September 2024. So we will consider the depreciation of the respective year and find out the written down value as on this day. So from 1st April 2022, depreciation will be at 10%. So that will be 3 lakh 28,050. WDV as on 31st March 2023 will be 2952 450. Upon that, again at 10%. So WDV as on 31st March 2024 will be 26 lakh 57,205. Remember, the auction is happening as on 1st September. So till there, we have to consider depreciation. 10% depreciation on such amount for how many months? For 5 months. How are we getting 5 months? April, May, June, July and August, because the auction is happening on 1st September itself. So therefore for 5 months. So that will be 1,10,717. After considering, our value will be the written down value as on 1st September 2024 is 25 lakh 46,488. On this, we will compare with the sale proceeds, that is the auction amount, which is 5 lakh 62,500. Definitely there is a loss. So that the loss amount is 19 lakh 83,988. So what will be the journal entry? The asset is going out of the business, so it will be credited. This is the loss. So profit and loss account debit to plant and machinery. So this 1983,990 will appear on your debit side, sorry, credit side. See, buy loss on sale. Remember, we are doing this from 1st April 24 to 31st March 25. So we have to also record the depreciation which happened from 1st April 24 until 30th August 2024. Clear with this? So that was for 5 months. We have already calculated this. That is 1,10,717. Properly note all of these points, guys, because most of the students tend to take the total depreciation calculated till now, that is starting from 1st April 2022. That would be a complete error from your part, because we are just presenting the ledger here from 1st April 2024 until 31st March 25. Clear with this? I hope what all points have been highlighted is clearly understood to all of you. Next, on the same date, there was another machine which is getting scrapped, for which you have to also again understand the working note. Calculation of loss. But for this, they have given the cost from 1st April 23. So the cost was 32 lakh 77,500, 10% on WDV basis. So 10% for that particular year will be 29,049,750. That is written down value as on 1st April 24. We have to calculate the depreciation for 5 months again before 1st of September. So depreciation at 10% for 5 months. So this will be 1,22,906. Remember, this will go to the plant and machinery account, and then this was completely scrapped, realized nothing. So whatever will be the WDV after depreciation will be completely lost, which is 28,26,844. So, how will this be presented? 26, 20, 28, 26, 844, which is your loss on scrapping the machine. On the same machine, depreciation will be there. So, by depreciation, which is 1,22,906. I hope till here all of you understood. Now, observe one important thing carefully. The total asset which was worth was 142.50. On that, there was part of the items which was auctioned, which was scrapped. Some machineries was also additionally purchased. So there are still some machinery, part of plant and machinery lying in the business, on which we need to charge depreciation for the whole year, because that is present in the business, correct? So that calculation should also be understood. See, balance of machinery account on 1st April 24. How do we calculate? First, take the total value of asset given, and then consider the WDV of machineries being sold, being scrapped. We can use these working notes and consider these values. C1 is 26 lakh 57,205, and then there is another WDV 29,049,550. So these two is being taken care here. This is not present in the business, so we have to reduce this. So total 56 lakh 6,955. The remaining machinery worth is 86,43,045. Remember one thing, guys, in the current year there was some asset purchased as well, but that was purchased in between the year. For this, there will be depreciation charge for the whole year at 10%. See, for 12 months. And for the remaining asset which was purchased in the current year, it was purchased on 1st September. So 1st September to March. September, October, November, December, Jan, Feb and March. So totally for 7 months we will charge depreciation. Total of these two will be 9,90,707. The entry here will be depreciation account debit to plant and machinery. So this will be reflected in your machinery account by depreciation. Clear with this? After we enter all of these transactions, there will be some closing balance left, which will show this as balance carried down. I hope all points of how the values have been arrived is clear. As I mentioned in the beginning itself, you will not get this until you practice all this by yourself. Make sure you also solve this once and compare with the values which you are also getting or not. As I'm clearly telling, concepts is very important, guys. Students can commit common mistakes here with respect to calculating months and taking WDV values. So make sure you note all of these stuff. So this completes our two questions. Moving on to question number 3. Income and expenditure account of Global Sports Club for the year ended on 31st March 2025 is given as under. So observe one thing, they have given us the income and expenditure. So the requirement will be either to prepare your receipts and payments. So let's observe. See, they are asking us to prepare receipts and payments account and then balance sheet as of 31st March 2025. Whenever we are getting into such full-fledged questions, always open the account. Also, one important thing when there is not for profit organization question is you have to make a close observation whether the opening capital balance is given or not. If not, we have to also present the opening balance sheet. I hope all these concepts are clear to all of us. Yes. So they are giving us the detail of income and expenditure, and then this account has been prepared after the following adjustments. So opening balance is given and closing balance is given. Subscription outstanding, received in advance, outstanding salary, prepaid electricity expenses is given. Next, the club owned a sports ground valued at 2,40,000. The club had sports equipment on 1st April 2024, which is the opening balance, valued at 62,400. At the end of the year, after depreciation, the value of this equipment amounted to 64,800. Next, audit fee of 4,800 for the year 23-24 was paid during the current year. 23-24 is your previous year. Audit fee for 24-25 is as yet outstanding. That means there is a liability because the current year expense of audit fee is not yet complied. During 23-24, the club had raised a bank loan of 48,000. This is your liability. This loan was outstanding throughout the current year as well. On 1st April 2024, cash in hand amounted to 33,360. Why do you think all these values are given? Because there is no opening capital balance available in the entire question. So we need to also prepare the opening capital, opening balance sheet to find out the capital fund. So let's observe how the workings have been done. So the requirement of question in this is to prepare receipts and payments account and then balance sheet. As we run through the question, we also observe that there is no capital fund or opening capital balance given. So for that, we'll also have to prepare opening balance sheet. So first job of yours is to completely open all set of accounts as we have commonly followed in approaching an NPO question. Open all the respective accounts, that is first receipts and payments, and then receipts and payments, balance sheet. Along with that, one as a working note, your opening balance sheet as on 31st March 2024. So as we run through, we can simultaneously enter the values. So first, expenditure and income is given. Remember, it is receipts and payments, which is as good as your cash book. So it will have the opening balance and closing balance. If you observe, the opening balance of cash is given on 1st April 2024. The cash in hand amounted to 33,360. The same thing we will enter. See, balance brought down 33,360. This is also your asset which will appear in the opening balance sheet. So in the opening balance sheet, which is prepared as on 31st March 2024, cash in hand 33,360. I hope this is clear. Next, since we had to open the account, that's why I first covered that cash balance. Now, to upkeep of grounds, this is your payments. There was no such adjustment. So 24,000 will come on the payment side. To salary, we will again observe the receipts and payments since we have to scroll down and just informing you or explaining you well before here. To salary, 1,14,000. See, for this salary, there was an adjustment. There is an outstanding salary opening balance and closing balance is there. First of all, this is your liability, so it will impact both opening balance sheet as well as closing balance sheet. And then the adjustments. So what is the adjustments? We need to record the the payments of salary. So this is opening outstanding, which will be added, and closing outstanding, which will be subtracted. See, salary here is 1,14,000. 9,600 add 10,800, subtract. See, by salary 1,14,000 add 9,600 less 10,800. So this is 1,12,800. As I mentioned, opening outstanding, closing outstanding appears in the respective balance sheets. See here, salaries outstanding 10,800, and then there is salaries outstanding 9,600. I hope this is clear. Next point. So this is done. To books and magazines 12,000. So there was no specific such expenses. So this is again an expenditure. We will record it on the payment side. Books and magazines 12,000. Then we have annual dinner expenses. So when we have such amounts, remember guys, in the income and expenditure, we will net off generally and show. But in receipts and payments account, receipts should be recorded separately, payments separately. So we will cross check whether, yeah, see here there is expenses and then contribution, which needs to be separately presented in the receipts and payments. So expenses will come on the payment side and contribution on the receipt side. 36 on the payment and 24 on the receipt side. See here, the contribution for annual dinner 26,000, 24,000, And by annual dinner expenses, 36,000. I hope this point is clear. Next. Then there is audit fees 6,000. For audit fees, there was some adjustment. What was the adjustment? See, audit fee of 4,800 for the year 23-24 was paid during the current year. In the receipts and payments account, we are not considered whether it is past, present or future expenses or income. We just considered about the inflow or outflow. So this was the expenses pertaining to the previous year, but it is paid in the current year. So that we will record in the receipts and payments account for 4,800. See here in the receipts and payments account, by audit fees 4,800. That is what has been recorded. In the income and expenditure, they would show you the current year expense. Remember, the audit fee was for the current year is still outstanding. That means in the opening balance sheet, before it is paid in the current year, it was still outstanding. Yes or no? So that will be your liability. So observe in the opening balance sheet, 4,800 was your liability. Current year expense is anyway outstanding. So that will again become my liability. See, audit fee outstanding, which is 6,000. I hope this point is clearly understood. Next. So this is a current year expense. This was not paid, means it is outstanding. That was what was shown in the closing balance sheet. Next, electricity expense 10,800. There was an adjustment wherein there was a prepaid electricity expense. So opening will be subtracted, closing will be added. So what is the value? 10,800 minus 0 plus 1,440. This is an expense, so you will find this on the payment side. See, by electricity expense 10,800, at prepaid 1,440. I hope this is clear. Next. Then we have interest and bank charges 3,600. There was no particular specific adjustments for it. So interest and bank charges appear on the payment side 3,600. I hope this point is understood, all of you. Whatever is being marked, I hope everyone are comfortably understanding this. Next, there is depreciation on sports equipment. Remember one thing, guys, it is a receipts and payments account which is similar to cash book. This is a non-cash expense, but they are giving us some details about sports equipment. We will consider this as part of working note to prepare sports equipment ledger. Why and how do we come to know that we need to prepare? Observe one thing, guys. The club at sports equipment, which is valued at 62,400, this is the opening balance. But at the end of the year, that is the value of this equipment after depreciation is 64,800. The value is being increased. That means there would be some asset which would have been purchased. The value is not given. So how do we find that out? By preparing the sports equipment ledger. So we will present all of these details in the sports equipment ledger. So the depreciation is 7,200. Observe the working note, guys. Sports equipment. Okay, they've not prepared the working note. You can do one thing. You can present this in your ledger, sports equipment ledger. How do we get the values? Sports equipment will have the opening balance. See, let me show this how to do the sports equipment account. So to balance brought down, by balance carried down, there was depreciation. So by depreciation, that was 7,200. Opening balance is 62,400 and 64,800. 62,400, 64,800. So 7,200 plus 64,800. This is 72,000. minus 60 to 400. So this will be 9,600, which is nothing but written as to bank, showing purchase of additional sports equipment, which should appear on your payment side. So if you observe on the payment side, 9,600 will be your addition. See, buy sports equipment 9,600. Here the institute have directly written such values. You can also make sure you present it like this as well. If not, if you feel logically or conceptually comfortable, directly write it in your ledger. Clear? Next. Then with respect to sports equipment, since this was an asset, we can also enter the same in our opening and closing balance sheets. This is done. And then surplus. So this surplus will be taken to our closing balance sheet 36,400, adding to your capital fund. See here, add surplus 36,400. Clear? Next. We have completed all the impacts on the expenditure side. Now moving on to income. Subscription 1,80,000. Subscription, as you're seeing in the NPO question, is a very important element. So make sure you do the working note properly. So they've given us the details of subscription outstanding and subscription received in advance. So we will make the working note. Subscription outstanding. Opening will be added, closing will be subtracted. Received in advance, opening will be subtracted and closing will be added. So we want the amount which is shown on the receipt side. See here, subscription account. Subscription as per income and expenditure is taken. Opening will be added, that is of outstanding, and closing advance will be added. So these two values are given, and accordingly the other two values are also considered. So subscription received during the year is 1,72,080. Outstanding subscription is in the nature of your income receivable, so that you will show it on the asset side in the balance sheet. Observe here, subscription outstanding, this is the opening balance, and subscription outstanding will be the closing balance. Subscription received in advance will be your liability. Opening balance is taken here, and then closing balance in the closing balance sheet. Clear with this? So likewise, we have entered sports equipment details also. Remember here, we'll take the closing balance in the closing balance sheet, and accordingly in the opening balance sheet, sports equipment 62,400 is taken. Sports ground details was given. So sports ground was valued at 2,40,000. So accordingly, the same values will also take it here. Sports ground 2,40,000. Sports ground 2,40,000. I hope you're all understanding the values which have been considered one by one. Then we have done with subscription. Entrance fee 6,000. So 6,000 is just given. So this will be your normal receipts, no other adjustments, because there was one sports equipment, one audit fee taken. We have to one enter with respect to bank loan. Rest all is being addressed. So entrance fee is your receipts. So two subscription entered, two entrance fee 6,000. Then we will have income from annual need. This is, there is a receipts of 35,450 and expenses. Remember, in receipts and payments, you have to show this separately. So on the receipt side 35,450 and on the payment side 18,000. Next, there is interest on investment at 11%. Cost of investment is 2,05,000. Purchases on 1st March 2024. Remember, this will have to appear on the asset side. Along with that, interest on investment 22,550. So on 2,05,000, 11% is again 22,550. There is no other adjustments provided for this. So we will enter accordingly this on the receipt side. So to interest on investments 2250, the receipts shown on the receipt side, and then payments 18,000. All of the entries has been made. Receipts and payments was given with the opening balance. We will find out the closing balance, which is 60,400, which will impact your closing balance sheet. So investments is 2,05,000. Bank loan was given in our adjustments 48,000 that will appear in the closing balance sheet. Remember, we opened the opening balance sheet to find out the balancing figure. So 4,81,960 after considering all of these items will be arrived at, that will be taken to our closing balance sheet at surplus, and then we consider all the calculations. Your total will be 5,89,640. I hope this is clear to all of you guys. I understand scrolling up and down would be confusing, but keep the question handy with you on the one side and then analyze the pointers of solutions which was explained. Clear? Next. This is next an admission question. Ram and Sham are partners sharing profits and losses in the ratio of 3 is to 2. The balance sheet of the firm as of 31st March 2025 stood as under. So they're giving us the requisite details. Due to financial difficulties, it was decided to admit Mohan as a partner in the firm from 1st April 2025 on the following terms. Mohan would be paid 40% share in the profits. The new profit sharing ratio after the admission would be 7 is to 5 is to 8. So this becomes our job pretty simpler. They have directly given the new profit sharing ratio. Mohan will bring 2 lakh towards capital in cash. Alright, that on admission, the goodwill of the firm will be valued at 2 years, purchase of 3 years, normal average profits of the firm. So, to calculate goodwill as per average profits method, Mohan will bring his share of goodwill in cash. The partners will neither withdraw their share of goodwill nor will the goodwill appear in the books of the accounts. So, the question is clearly emphasizing that Mohan will bring his share of goodwill in cash. So, there is capital brought in, there is goodwill brought in, and the partners will neither withdraw their share nor will the goodwill appear in the books of the accounts. That is what the precise point is. The profits for the previous 3 years were as follows: 40,000 which includes insurance claim of 80, 20,000 which includes voluntary retirement compensation of 2 lakh 20, and 1 lakh profit which includes profit of 50,000 on sale of fixed assets. Then it was decided to revalue the assets, fixed assets, investments, and then there is inventory. Trade receivables 5,000 was considered as irrecoverable. That means this will be your bad debts, and a further 5% is to be provided for bad and doubtful debts. They are asking you to create provision. You are required to prepare revaluation account, partners capital account, and then balance sheet as on 1st April 2025 after the admission of Mohan. See, in the admission question, you have to first and foremost observe the treatment of goodwill. In this question, they are asking us to first value the goodwill. There is a requirement of finding out the first adjusted profit because they are given some treatment of abnormal items. So let's calculate the yearly profit. Here I am just showing you the working year itself so that you will understand better. 23, 24. Isn't visible. Yes. So 40,000 is the profit given, 20,000 loss, and then 1 lakh profit. Just showing you the treatment of abnormal items. First of all, insurance claim. This is again an abnormal item because we will not consider the value of insurance claim recurringly, that is every year, in our profit or loss figure. So this insurance claim, considering this to be received, you would have added. That means your profit would have gone up. Now we have to eliminate this effect. What do? We will reduce. So minus 80,000. Next, this includes voluntary retirement compensation. That means you have paid someone. Again, this is a huge amount which is abnormal in nature. That is, it will not appear recurringly every year. So it would have been reduced your profit balance. You need to eliminate this effect. So what do? We will add. So 2,20,000 add. Later, profit of 50,000 on sale of fixed assets. Again, when there is profit included, it would have been added. So we need to eliminate this effect. So we will subtract 50,000. So this gives me my adjusted profit or loss. Minus 40, 2 lakh and then 50,000. So this is 3 years data. So if I consider minus 40 plus 2 lakh plus 50,000, 2 lakh 10,000, I am supposed to find out the average profit. So this is 2 lakh 10,000 divided by 3 years, 70,000. The number of years of purchase is given as 2. So 70,000 into 2. So your goodwill will be 1,40,000. Let's observe the ICAI is working. See here, 1,40,000 is the value of goodwill. So goodwill to be brought in by Mohan, they have given 40% would be his share. So on 1,40,000, 40% will be 56. That is his share of goodwill. And remember, this share of goodwill need to be apportioned amongst the old partners in which ratio? That will be in sacrificing ratio. So we have to find out the sacrificing ratio. How do we find out old ratio minus new ratio? The question is emphasizing about the new ratio details as well, so we can easily find that out. Yes, let's find out the sacrificing ratio in order to apportion the new partner's share of goodwill. So, old ratio of Ram and Sham as per the question is 3 is to 2. New profit sharing ratio is anyway given to us in the question. 7 is to 5 is to 8. So for Ram, old ratio minus new ratio will give me my sacrificing ratio. So 3 by 5 minus 7 by 20. So LCM between 5 and 20 will be 20 again. 5 fours are 20, 4 threes are 12, minus 7. So this will be 5 by 20. For Sham, 2 by 5 minus 5 by 20. 20 again, 5 fours are 4 twos are 8 minus 5. So this will be 3 by 20. Sacrificing share will be 5 by 20 and 3 by 20. Sacrificing ratio will be 5 is to 3. So the share of partners' goodwill. What was the share of partners' goodwill? 56,000 will be apportioned. Observe here. See, to Ram, 56 into 5 by 8 and to Sham, 56,000 into 3 by 8. I hope this working all of you understood. So here they have also given the calculation in the basis of proportion because Mohan was given 40% share in profits is what the question says. So you can also calculate it likewise. If not, you can easily do like the working which I showed. So this was with respect to the treatment of goodwill. Do it properly, guys. It will definitely have a good weightage. So how to start this question? First, prepare the revaluation account. So they've given the details of the value of fixed assets. Fixed assets is 8 lakh revised value in the balance sheet. The fixed asset was 6 lakh. So there is increase in fixed assets by fixed assets 2 lakh in the revaluation account. Investments is turning 0. So there is a loss. Two investments with respect to the value of 1 lakh. Then there is inventory 2 lakh 96. In the balance sheet, inventory value is 3 lakh 25. So there is a reduction minus 296, 29,000 on the debit side of revaluation. Then we have trade receivables 1 lakh 25. There was a point given. 5,000 was considered as irrecoverable. That means 5,000 is your bad debt. Write it on the debit side of revaluation. So the total trade receivable was 1 lakh 25. In that 5,000 is bad. So remaining is how much? 5%. So remaining is 1,20,000. 5% of this will be 4,750, which will be shown as your provision for bad and doubtful debts. So these were all the points on the asset side. There was nothing mentioned on the liability side. So the treatment of revaluation will be considered as per the values I mentioned. So two investments because it has turned out 0, two inventories, two bad debts, 5 to provision for doubtful debts. I hope you all understood how this has been arrived. So provision for bad and doubtful debts, how are we getting this? 1,25,000. Whether this is visible, not visible, just a minute. So 1,25,000 minus 5,000. will be 1 lakh 20. On 1 lakh 20, if I apply 5%, we get 6,000. Clear? So after we consider all the revaluation impacts, there is a profit on revaluation which will be transferred to old partners in their old profit sharing ratio. So that has been considered. Then we will open the capital account by balance brought down with the respective capital. By bank introduction of new partners capital account, he is bringing 2 lakh, and then transfer of profit on revaluation by revaluation account 36,000, 24,000. Remember, the question clearly told Mohan is bringing his share of goodwill, but no partners are withdrawing their share. So what will be the entry? Bank account debit to, again, the respective partners capital. So this is what the treatment is done by the institute. There is also an alternate way of doing this. How can we do it? So bank account debit to Mohan's capital. So this will include your capital account plus share of goodwill. So 2 lakh was his capital, 56,000 was his goodwill. So we will take 2 lakh 56 here, and then Mohan's capital account will be debited and the respective old partner's capital account will be credited. So Mohan's capital account debit to Ram's capital and to Sham's capital. This is also another way of doing this, or else if you have understood by bank how it is being considered, this is also fair enough to present. So after considering all of these, we will enter the ledger totals and find out the respective closing balance in the balance sheet. Take the balances of capital account and take the revised, revalued figures here. Trade receivables was 1,25,000, 5,000 was bad, and 5% provision was created, that was 6,000. So your balance will come to 1,14,000. And then all other liabilities, write it as it is, loans in advance, inventories, and then bank balance. Accordingly, you will have the total of balance sheet at 16,66,000. Question was pretty simpler, guys. We have to just be careful with respect to calculation of goodwill. What is the examiner's comment here is most of the students have failed to correctly calculate the sacrificing ratio because the question somehow confuses you giving this percentage. If you're clear conceptually, if you remember the working note I did, you can still solve using ratios. If you are fair enough to understand these points, yes, still clear. Now, just to interpret how are they taking 60 and 40 is, remember the old ratio was 3:2. The considering the entire structure has 100%. So for that, 3 out of 5th, just take 3 divided by 5. You'll still get 60%. That is how they are getting 60 and 40. And then 2 by 5, 40%. 40% was given as a share to Mohan, and that is how they are being calculating this. Clear? Yes, likewise, if you want to know how this 35-25 came, 7 by 20, which is your total proportion, 35%, and then 5 by 20, which is 25%. I hope this is comfortably understood. Next question. A, B, and C are partners of ABC LLP, sharing profits and losses in the ratio of 3:2:1. The balance sheet of the firm as the 31st March 2025 stood as under. So they're giving us the respective assets and liabilities. On 1st April, A desired to retire from the firm and the remaining partners decided to carry on the business. So this is a retirement question. It was agreed to revalue the assets and liabilities on that date on the following basis. Goodwill of the entire firm is valued at 2,88,000. Now the goodwill is directly given and A share of the goodwill is adjusted in the accounts of B and C, who would share the profits equally in future. So there is a mention of new profit sharing ratio as well. So when there is retirement, the retiring partner will have to take his respective share of goodwill. So what will be the journal entry? Old partner's capital account debit to retiring partner's capital account. And this will be apportioned in which ratio? In the gain ratio. Moving on. Building is to be appreciated by 30%, plant and machinery depreciated by 20. So building appreciation will come on the credit side of revaluation, plant and machinery depreciation on the debit side. Inventories are to be written down to 80% again on the debit side. Trade receivables are considered good only up to 95% of the balance sheet figure, means that 5% you need to create as a provision, debit side entry, and the balance is to be provided for as doubtful. Old credit balance of trade payables were 16,000 are to be written back. So trade payables balance was 3 lakh 20. What they are telling here is old credit balance are to be written back. That means you are reducing the balance, giving back these trade payables. So this is nothing but a saving to us. So we will enter this on the credit side of revaluation. Observe here. See, by trade payables 16,000. All other values, if you calculate, you will be clear. That's why I'm just explaining you directly. Then the joint life policy of the partners is surrendered and a sum of 96,000 is realized therefrom. So joint life policy, if you observe, the balance sheet was given. They are not mentioning this on the asset side. So what does this indicate? This was not treated as an asset but as an expense. So if you are receiving any amount, the journal entry here would be bank account debit to all partners' capital in their old profit sharing ratio. 96,000 will be equally apportioned amongst all the partners. Next, the total capital of the reconstituted firm shall be the same as before the retirement of A. So what is the total capital? 9,60,000. They want to make sure that even after A retires, the same capital balance will remain. And individual capital of B and C shall be in their profit sharing ratio and the same shall be brought in by them. So what does this mean? It shall be in their same profit sharing ratio means as per the new profit sharing ratio. Remember, there was details of new profit sharing ratio given. Don't you think this becomes more simpler? 9,60,000 divided by 2. So 4,80,000 for B and 4,80,000 for C should be their closing capital balance. Yes or no? So this was easy for us to find out carefully here itself. Next, 75% of the amount due to A on his retirement shall be settled in cash and the balance shall be settled after 1 year. So that balance 25% will be shown as loan. You are required to drop the following accounts after giving effect to the above transactions. Revaluation account, partner's capital and then bank account. One of the important examiner's comment to observe here is the question is not at all asking to prepare the balance sheet since they have asked to prepare bank account. First of all, the students have not clearly presented the bank account. They are wrongly interpreting to write the balance sheet. Most of the students have given the balance sheet for this question, but the examiner's comment is clearly communicated telling that there was no requirement of the question at all with respect to preparing the balance sheet. So reading the question carefully, being alert at this point is relatively important to save your time here, guys. Moving ahead, so revaluation account, we roughly understood what values will appear. So revaluation account, one extra treatment what institute has done here is they have taken the joint life policy surrender value here itself. If this is confusing to you, you can just eliminate this value and find out the profit or loss on revaluation. Accordingly, take it to capital. They have also given the alternate treatment. See here. Alternatively, surrender of joint life can also be routed through partners' capital. As I told you, the entry would be bank account debit to old partners' capital account. So the alternative treatment. See, in such case, there will be no surplus or deficit in the revaluation account. Bank account debit to A's capital, to B's capital, to C's capital. This can be your alternate entry. So if that is done, what they are telling is you will not have profit or loss on revaluation itself because 96,000 is your value. 96,000 is also the profit on revaluation. So ultimately both sides it will match. By balance brought down, take the respective balances. In this question, there is revaluation. If we are not routing the joint life policy treatment through revaluation, this will not come. Next, there is a goodwill entry. Goodwill of the firm was valued at 2,88,000, I guess. 2,88,000. Remember, this should be apportioned in the gain ratio. Old ratio is given 3:2:1. New ratio is equal. So we need to find out the gain ratio. See here, gain ratio is nothing but new profit sharing ratio minus old ratio. New ratio is 1/2. Old ratio was given as 3:2:1. So 2 by 6 because we are calculating for B. Remember, most of the students will again commit mistakes here for taking for A. We are doing this calculation for B. LCM between 2 and 6 is 6. So 2 3s are 6, 3 minus 2. So this will be 1 by 6. Then for C, 1 by 2 minus 1 by 6. 6, 2 3s are minus 1. This will be 2 by 6. So the goodwill is given of the firm as 2,88,000. A share is 3 by 6. So 2,88,000 into 3 by 6 will be 1,44,000. This will be apportioned in the ratio of 1 by 6 into or 2 by 6, or in the ratio of 1 is to 2. That is 1 by 3 and 2 by 3. 48,000, 96,000 will be the amount. What will be the journal entry for this? So who are giving B's capital account debit, C's capital account debit to A's capital, who is the retiring partner. This will be the entry. So this will be presented in your capital account. See, to A's capital 4896 and by B's capital in A's column, by C's capital in A's column. There was one other important point about the maintenance of capital balance. We already found out that was 4,80,000 and 4,80,000, which if we enter this, we can easily find out what would be the amount which is supposed to be brought in by the old partners. Before doing that, we will close A's account. The question clearly tells 75% is paid and then balance 25% is shown as loan. So how do we find out the amount outstanding to Mr. A? 4,80,000. In this question, they've taken 48, so we are taking this 48 also for you to understand with the same value, 6,72,000. So this is the total amount due. In this 75% is 5,04,000. So how are we getting this? 6,72,000 into 75%. So the balance will be shown as A's loan, which will appear in the balance sheet. But here in this question, they have not asked us the balance sheet. And after we write the balance carried out, you will have the difference balancing figure on the credit side by bank. This will be your balancing figure. So that's why the question is asking us to prepare the bank account. So the opening balance, you can take it from the balance sheet, 1,60,000. And remember the joint life policy treatment, the entry was bank account debit to respective partners capital. So we can easily bring down the partners capital credit of 96,000. And then here to B's capital to C's capital with respect to these capitals being introduced, 1,76,000 and 4,00,000. Then remember 75% was settled to Mr. A. So that value will come. Then ultimately we will have the closing balance. The question just asked us the bank account. But as I clearly told, most of the students has committed the mistake. Rather than presenting bank account, or some have presented but they have not done it correctly. And most of the students have given the balance sheet even though there was no requirement about it in the question. Avoid or refrain from doing such mistakes, guys. I hope this question was also comfortably understood. Next. The following is the schedule of balances as on 31st March 2025 extracted from the books of Mr. Radhe. So they've given all of the balances. Then during the year, Mr. Radhe has distributed free samples costing 3,300 for publicity. Then a fire took place in the warehouse on 20th March and destroyed goods worth 6,000. The insurance company was admitted a claim of 4,500 on 31st March 2025. Create a provision for doubtful debts at 5% and provision for discount on trade receivables at 2.5%. Depreciation is to be provided on plant and machinery at 15% per annum and on furniture and fittings at 10% per annum. Bank overdraft is secured against hypothecation of stock. Bank overdraft outstanding on 31st March has been considered as 80% of real value of stock, deducting 20% as margin, and after adjusting the marginal value, 80% of the same has been allowed to draw as an overdraft. Prepare a trading and profit and loss for the year ended and then also balance sheet as on that date. In the entire question, this is the most important one where most of the students also feel tricky point here. Rest all you can easily do it. So this is a final accounts question. When you approach a final account question, open all the respective accounts, trading, profit and loss, and then balance sheet. So open the respective trading account, profit and loss, and then your balance sheet. Likewise, we will have respective working notes to be also considered. So let's understand this one by one. So keep the questions side by side so that will be helpful for you to compare with the answers easily. So here I will have to scroll down in order to look at the question. We will run through the trial balance data given. Advertisement expenses 13,400. Where will this come? In my profit and loss account. Bad debts, profit and loss 4,400. Bad debts recovered, profit and loss credit side. Other two is on the debit side. Cash at bank in the balance sheet. Bank overdraft, balance sheet. Assets, liabilities. Capital, balance sheet, liabilities. Carriage inwards, trading account. Carriage outwards, P&L. Cash in hand, again balance sheet, assets. Drawings, balance sheet, capital. Furniture and fittings, balance sheet, assets. Interest paid on loan, your P&L. Indirect expense, administrative expense, P&L. Opening stock, trading account. Plant and machinery, balance sheet, assets. Prepaid rent, again, balance sheet, asset. Because this is given in the trial balance, the entry would have already been reflected. Then printing and stationery, P&L, expense. Provision for discount on trade receivables. Remember, provision for doubtful debts. These two is already given to us. There is an adjustment which is also mentioned. So we have to be careful enough in order to considering the amounts. We need to find out how much after incorporating these adjustments. Then purchases, trading, rent, rates and taxes, P&L, salaries and allowance, again P&L. Salaries payable, this is already given in the trial balance, so this becomes your liability. Sales, trading, trade payables, again balance sheet, liabilities. Trade receivables, balance sheet, assets. Wages and salaries, wages and salaries is given, so we will take it to trading account. So this is the classification. Accordingly, we can find out the respective values. During the year, Mr. Radhe has distributed free samples costing 3,300 for publicity. What is the journal entry for this? Advertisement expense account debit to purchases. So what will be the impact we need to consider? Add advertisement expenses plus 3,300. There was some amount for advertisement. See 40,640. Add 3,300 to it. And then also consider reduction of this amount in your purchases. So let's observe this treatment. See here, goods distributed as free samples, which is taken as a subtraction, and then in my advertisement expenses added. Clear with this? Yes. Next. A fire took place in the warehouse on 20th March and destroyed goods worth 6,000. The insurance company has admitted a claim of 4,500 on 31st March. First of all, the goods lost will be your loss. That needs to be recorded in your profit and loss. See, loss by fire. Understand one thing, 6,000 was the total goods lost by fire. In that, insurance company has accepted claim for 4,500. So your net loss will be 1,500. That is how this value has been arrived. Next, create a provision for doubtful debts at 5% and provision for discount on trade receivables at 2.5%. I told you there is already an existing provision, so you have to consider that as well and then find out the residual. So first of all, how much is my total debtors? Let's find out the value of total debtors first. Bad debts is given, bad debts recovered is given. Advertisement expense. Oh, sorry, this is administrative. You have to take advertisement expense here. Trade receivables 4,80,000. So they're asking us to present 5% as doubtful debts and 2.5% as discount. So there is a working note already given by the institute. Let's understand from that itself. So existing trade receivables is 4,80,000. So required is 4,80,000 into 5%. So 24,000. From the given details, 12,800 was already presented. Remember the concept. We will add the new provision and subtract the old provision. That is what is done. So 24,000 is required, but you have just maintained 12,500. How much extra required? 11,200, which will be taken to my profit and loss. Likewise, provision for discount on debtors. Remember that will be taken on the good debtors after providing for provision. So 4,80,000 minus 24,000. On this, I will have to create 4,56,000. So how am I getting this? 4,80,000 minus 24,000. So on this value, the required provision was how much? 2.5% into 2.5%, that is 11,400. See, this is 4,56,000 into 2.5%. This is 11,400. How much was already created? 5,500. So the remaining is 5,900 required, which will be written in my profit and loss. See, provision for doubtful debts and then provision for trade receivables 5,900. Rest all values I've already told where and all that will be placed. You can accordingly cross check. Next. So this is done. Depreciation is to be provided on plant and machinery at 15% and furniture 10%. Plant and machinery 80,000 into 15%, 41,000 into 10%. Furniture and fittings 4,100. Accordingly, this will also be shown in the balance sheet. Clear with this? Yes. Next point. Depreciation is also done. Then there is bank overdraft, which is secured against hypothecation of stock. Bank, first of all, hypothecation of stock here means providing this as a collateral. Your bank overdraft, this is nothing but in the nature of a borrowing. So what is the collateral security? That is the stock of the business. So for providing this loan or credit facility, the bank is taking stock as the pledge. That is what this hypothecation means. Bank overdraft outstanding on 31st March has been considered as 80% of real value of stock, and after adjusting the marginal value 80% of the same has been allowed to draw as an overdraft. First observe one thing. In the entire question, did you anywhere observe the value of closing stock given to us? No, the closing stock was not at all mentioned. That means we need to first find that out. How can we find it? Because of this one particular adjustments. They are telling bank overdraft is based on what? See, it is being considered as 80% of real value of stock. So bank overdraft details is available to us. 80% is taken as the real value of stock. Upon that, and after adjusting the marginal value, 80% of the same has been allowed as an overdraft. So from the question, bank overdraft is 3,20,000. So how do we have to interpret this? Let closing stock be X, because that is what we require now. So the question is clearly telling that the bank overdraft is taken as 80% of the real value of stock, and upon that there is again 80% adjusted as the marginal value. So how do we present this? X into 80 by 100. This is the real value of stock. On top of it, there is still 80 by 100, which is taken as adjusting the marginal value. This is 3,20,000. Now I have to find out X. X will be equal to 3,20,000 into 100 into 100 divided by 80 into 80. I can cancel out the zeros. So this will be 3 lakh 20 into 100 divided by 64. So your closing stock will be 5 lakh. So where and all closing stock will come? In my trading account. See, observe the entry here. Buy closing stock 5 lakh, and then one more will appear in your balance sheet. Closing stock 5 lakh. I hope this is clear. Rest all points are easily manageable. So after you enter the values, you can find out the closing amount. So there is also an alternate way of given to calculate the closing stock. So accordingly, we can find it relatively. Understood, all of you? Yes. Next question. Attempt any one of the two subparts, that is either part 1 or 2. So there is an inbuilt choice given in question number 5. 5A, you can either take first one or the second one. But we need to understand this to solve. On 30th November, the bank statement of Rama and Sons showed a debit balance of 39,700 at bank. 39,700 at bank. On comparing it with the cash book, the following discrepancies were observed. So they have given us the list of transactions. You are required to ascertain the balance appearing in the cash book of Rama and Sons as on 30th November. First of all, this is a bank reconciliation question wherein they are giving us a debit balance at bank. So what does this mean? Generally, bank will have a credit balance. So this is bank overdraft. As per examiner's comment, most of the students have considered that, but they have reversed the impacts, that is, add less, where they have gone wrong with respect to the analysis what they have taken as their base book balance. So make sure before you proceed, know your starting points clearly. So that is when it becomes helpful for us to interpret it easily. Clear? So here they've given us the debit balance of 39,700. So this is your cash book and this is your passbook. Let's understand the entries one by one. 39,700 is the starting point. A check of 10,000 was issued to a supplier on 25th November, but it was not presented for payment till 3rd November. The balance is given for 30th November, so this transaction will have an impact. If the check has been issued, your cash book balance would have come down. What book you can adjust in this question? Passbook. So if we have to balance, I will have to reduce. But remember, this is an overdraft balance. What will I do? Reverse the effect. I will add. So 10,000 will be added. See here, 10,000 add. Clear? Next. A check of 3,000 was received from a customer and deposited on 28th November but was credited by the bank on 2nd December. We are doing this as on 30th November. So check received would have increased your cash book. There is no entry in the passbook. So because it was credited on 2nd December, if we have to bring the same book at the same level, we need to add. But I have to reverse the effect, so I will reduce. Minus 3,000. But not credited by the bank. Next. The bank had directly collected interest of 2,400 on behalf of the firm, which has not been recorded in the cash book. Cash book, passbook. The bank has collected interest means the balance is increased. Which book I can alter? Only passbook. So if I have to match, I will reduce. But here I have to reverse the effect, so I will add 2,400. Bank interest not entered. Clear? Next. Credit side of the bank column of cash book was overcast by 900. Credit side of bank column of cash book means they're talking about the payment side. This is overcast by 900 means your cash book is showing less because it is payment by 900. Which book I can alter? Passbook. I have to bring it down. Since this is overdraft balance, I will add 900. Credit side of the bank column overcast 900. Clear? Next, the customer had directly deposited 8,000 into the firm's bank account, but no entry was made in the cash book. There is a direct deposit. Direct deposit means your balance would have been increased. Passbook balance is increased. No entry in the cash book. I will have to reduce. Since this is overdraft balance, I will add 8,000 add. Check directly deposited 8,000. Next, a check of 2,000 deposited earlier was returned dishonored and debited in the bank statement only. A check of 2,000 deposited earlier was written dishonored means there is a debit in bank statement means the balance would have come down. So which if I have to match, I can alter only passbook. I will certainly add. Since this is an overdraft balance, I will reduce. See here, check dishonored and debited to bank 2,000. Next, as per standing instructions to bank, EMI of 20,000 was paid by the bank. The same was omitted to be accounted for in the cash book. So this is the payment done. So your passbook balance would have come down. If I have to match both the books, I will have to certainly add. Since this is overdraft balance, I will reduce 20,000. EMI paid by the bank 20,000. Comfortable? Yes. Next, amount of 5,000 was wrongly credited by the bank to the firm's account for which details are not available. Amount was wrongly credited by the bank to the firm's account. That means the balance would have been increased. There is no entry in the cash book. If I have to match, I will have to reduce. Since this is overdraft balance, I will add 5,000. See, amount wrongly credited 5,000. Next, the cashier had wrongly recorded a bank payment of 12,500 as 21,500 in the cash book. So what is the difference? 21,500 minus 12,500, 9,000. So this is a payment, bank payment in the cash book has been recorded. So the balance is down. If I have to match, I will have to certainly reduce. Since this is an overdraft balance, I will have to add by 9,000. Error in entry of payment 9,000. So how did I get this? 21, what was the value? 21,500 minus 12,500. I hope this point is clearly understood to all of you. And this was pretty simple as well. Students have committed mistakes in order to consider this as an overdraft balance, taking this as a normal credit balance. So after doing all addition subtraction, the balance of the BRS is coming positive. So since we started with overdraft itself, since it is coming positive, so you'll still have a overdraft balance, but as per which book? This will be as per cash book. Clear? Next, there was a choice in this subpart. So next question is on bills of exchange. T draws on J a bill of exchange for 1,80,000 on 1st April for 3 months. J accepts the bill and sends it to T, who gets it discounted from his banker for 1,72,800. T immediately remits 57,600 to J. On the due date, T, being unable to remit the amount due, accepts a bill for 2,52,000 for 3 months, which is discounted by J from his banker for 2,40,660. J sends 40,440 to T. Before the maturity, T becomes bankrupt and his estate is paying 50 paisa in a rupee. That means 50%. Pass the necessary journal entries in the books of T. So they're just asking us in the books of T. So this is the concept testing of accommodation of a bill. If you have structurally understood, this becomes pretty simple for you to solve. So first of all, T is drawing a bill of exchange. So what will be the journal entry for this? Bills receivable account debit. This has been accepted by J. So the entry will be bills receivable account debit to J, 1,80,000. Say bills receivable account debit to J, 1,80,000. Then this bill is being discounted with the bank for 1,72,800. When you receive the money, the entry would be bank account debit, discounting charges account debit to bills receivable. You are receiving 1,72,800. The value of the bill was 1,80,000. So the entry will be 1,72,800, 7,200, and then 1,80,000 to bills receivable. The bills receivable discounted with the bank at a charge of 7,200. The same thing is happening on 1st April. Remember, this is an accommodation of bill. So whatever amount is received should also be remitted to J. So when you're paying, the receiver account will be debited. So J's account debit to bank account to discounting charges account. So remember, you will also apportion the share of expenses. So the question is clearly specifying how much you're giving back to J. Immediately remits 57,600 to J. So let's understand this with a table. There is T and J. 1,80,000 is the bill amount, 7,200 is the discount, 172,800. If J gets 57,600, how much is liable for T? 172,800 minus 57,600. This is 1,15,200. Now we have to also apportion the discount in the ratio of benefit derived. How can I find it? See, 7,200 is the discount for 1,72,800. I want how much is it for 57,600. So this is not visible. Just a minute. So 57,600 into 7,200 divided by 1,72,800. 57,600 into 7,200 divided by 172,800. This will be 2,400. So what will be the journal entry? J account debit to bank account to discounting charges. 57,600 was given to us in the question. 2,400, how do we find this? So this is the working. To find this 2,400. So this becomes pretty simpler for you to consider. I will just mention it here. Next, so this is our running table. So this becomes easier for us to calculate. So if I've given 2,400 as a discount in 7,200, so remaining 4,800 goes for T. So if I have to find out the net balance, 4,800 plus 1,15,200, this will be 1,20,000 for T and 57,600 plus 2,400, 60,000 for J. Till here all of us clear? Then, next what happened? On the due date, that is from 1st April 2025, 3 months later plus 3 days of grace. That means April to May, June, July. 1st of July, 3 days of grace. So it will be 4th of July 2025. T being unable to remit the amount accepts a bill for 2,52,000 for 3 months. First of all, we will make the entry for this. Now, T is accepting the bill. That means there will be a bills payable drawn on him. So, what will be the journal entry? Remember, we are preparing journal entries in the books of T. So, as per the due date, see in the bill of exchange question, these points becomes very important. J account debit to bills payable for the value 2,52,000. Moving ahead, which is discounted by J from his banker for 2,40,660. Now J is getting it discounted. We are making the journal entries in the books of T. J sends 40,440 to T. This is only what we are concerned about. 2,40,660 is being received. 2,40,660 has been received, out of which 40,440 is being sent. 40,440 is being sent to whom? To T. That means balance 24660 minus 40,440 is lying with J. That is 2,220,000. Now what was the bill amount? 2,52,000. We are getting 2,40,660. What is the discount? 11,340. Remember, the expense should also be apportioned in the ratio of benefit derived. Yes. So what will be the value here? We need to consider 1,20,000 for 40,440. So how do we apportion this in the ratio of benefit derived? So if I have to find out the net balance as on this date, so it will be 1,20,000 plus 40,440. That is what is taken here. Observe 1,20,000 plus 40,440. This is representing 2,40,660. So divide by that, the total discounting charges is 11,340. So remember, T is receiving the amount, so the entry would be bank account debit, discounting charges account debit. Who is giving? J. So to J's account, and this also happening on the due date itself. I hope this entry is understood. Later, what is happening? Before the maturity, T becomes bankrupt and his estate is paying 50 paisa in a rupee. So T has become bankrupt. First of all, when there is bankruptcy erased, we have to first pass an entry of bill dishonor. Remember, he had accepted the bill. This one. He had accepted the bill. First, we will reverse this entry. So what will be the entry? Bills payable account debit to J. We have to consider this on the due date of the respective bill. So 4th July, we drew this bill. 3 months from that date. So 8, 9 and 10, 3 days of grace. So this will be 7th of October. So we will first reverse this. Then 50 paisa is realized from his estate. We have to find out how much is remaining from his estate. How much is available in his estate? See, 1,20,000 in 11,340. First, I will have to apportion the discount. In this calculation itself, we can find out 7560 is going for J, means out of 11,340, 7560, 3780. So how much is the net balance? 1,20,000 plus 40,440 plus 3780. 4440 plus 3780. This will be 1,64,220. 60 plus 2,220 plus 7560, 267780. Bank to discounting charges 7560. Oh, sorry. Here we have just taken the interchange amount because T received 7560 for this one, and 11,340 minus 7560 is 3780 for J. I took the interchange amount there because that was given for T and this was for J. So net balance 1,20,000 plus 4440 plus 7560. This will be 1,68,000 for T. 60,000 plus 2,220 plus 3780. 2,64,000 for J. So net balance of T is 1,68,000. In this only 50% is realized. So what will be the entry? J's account debit 1,68,000 to bank, 50% is realized and the remaining goes to deficiency account. If you have understood this calculation, the values could be pretty simpler. Make sure you practice this really well in order to understand the entries and be careful about the respective due dates. Anyway, after the completion of this video, I will share you this document itself, wherein you will have all the working notes done respectively, so that also be useful for you to follow. Clear? Yes. So this was choice questions which was there. One was for BRS and then there was bills of exchange. Next question. Sumitra is engaged in the business of trading in detergent. She does not maintain proper records. From the following details, you are required to compute the total of purchases and sales. So they have given the requisite details. We have to just compute the total purchase. Total purchase or total sales includes both your cash plus credit transaction. Remember that both cash purchase as well as credit purchases. See, opening balances are given of inventory, sundry creditors, debtors, closing balances are also given. Then the respective transaction with creditors and debtors given. Simple interpretation. You can just prepare the debtors and creditors account, find out their credit amount, and then there is anyway given of cash details, cash sales, cash purchases given. We can directly add and find out the respective amounts. See, the opening balance of inventory. Sundry creditors will open on the credit side by balance brought down. Sundry debtors on the debit side to balance brought down. And then closing balance to balance carried down by balance carried down. Cash paid to creditors, the entry will be creditors account debit to cash or bank. Cash received from debtors, bank account debit to debtors, all these entries will be mentioned. Discount received during the year, you can receive discount when you are actually paying. So this can be given to us from the creditors, a creditors account debit to discount received, and discount allowed to debtors. So discount allowed to debtors. All these entries you can find it out here. Whatever we discussed in sundry creditors and then sundry debtors. Credit purchases you can find out as a balancing figure. So buy purchases 2,90,000. To that we will add cash purchases 30,000. So accordingly we can find out our total purchases. Clear? Then we will have sundry debtors. Then we will have total sales, credit sales plus cash sales. Cash sales details are given to us in the question. Credit sales, we will find this as a balancing figure, 5,80,700. So accordingly, this details will come. Clear with this? Yes. So this was a simpler question, minimal time taking if you have got the concepts properly. And this question is framed from your single entry chapter, account from incomplete records, wherein we will understand the preparation of debtors and creditors account. Next question. Ajanta Limited issued 50,000 equity shares of 10 each payable as rupees 3 per share on application, 5 per share including 2 as premium on allotment and 4 per share on call. That means here the allotment money is 3 rupees. All these shares were subscribed. Money due on all shares was fully received except from X holding 1,000 shares who failed to pay the allotment and call money, and Y holding 2,000 shares who failed to pay the call money. All those 3,000 shares, that is 1,000 holded by Mr. X and 2,000 of Mr. Y, were forfeited. Out of forfeited shares, 2,500 shares, including whole of excess shares, were subsequently reissued to Z as fully paid up at a discount of rupees 2 per share. Pass the necessary journal entries in the books of Ajanta to record. Observe here carefully to record the forfeiture and reissue of the shares. Also prepare the extracts of the balance sheet and notes to the accounts. Examiner's comment in this particular question is most of the students have written all the entries from application allotment, but the question is specifically asking you to record the entries on forfeiture and reissue. So the disadvantage for you guys would be you will lose lot of time if you start entries from the application, because the question requirement is just from forfeiture and reissue. Along with that, they have asked to prepare the extract of balance sheet and notes, which most of the students have missed. This is the examiner's comment. So let's interpret this and solve as per what is the question required. So we have to first pass the forfeiture entry and then later reissue. For forfeiture, 1,000 shares didn't pay allotment and call, and 2,000 shares didn't pay the call money. So what will be the journal entry? Equity share capital account debit. Remember, there is premium involved. On 1,000 shares, allotment money was also not received. So with respect to this number of shares, we will also eliminate premium. So the entry will be equity share capital account debit, securities premium account debit, 2 share allotment account to share call account to share forfeiture account. So this will be your journal entry. See, equity share capital, securities premium to equity share allotment to equity share call. Now, yes, how have we got this values? Share allotment was not paid for 1,000 shares. So 1,000 into 5 rupees allotment and premium money. 1,000 at 2 rupees premium money which was not paid. Total number of shares were forfeited was 3,000 into 10 rupees, which is the face value. And then equity share call was not paid for 2,000 shares. The call money was somewhere around 6 rupees, I guess. Call money on allotment and 4 per share on call. Okay. So the total number of shares which was not paying call money was 2,000 plus 1,000. So total number of shares is 3,000 into 4. And the balance will go to share forfeiture account. The entire details should be presented in the summary. The next entry would be of reissue. They are telling there is a discount of 2 rupees on reissue. So the entry would be bank account debit, share forfeiture account debit to share capital, entire 2,500 shares Out of 3,000, 2,500 shares have been reissued. So this is done at 8 rupees per share, 2,500 into 10. So the balance will be done through share forfeiture. Last important entry here is there is only 2,500 shares reissued, but 3,000 shares which were forfeited. In this 2,500, complete shares of X is being involved. So how do we find out the amount which is required to be transferred to capital reserve? We can prepare a working note. So here the ICAI has already given us the alternative. If the amounts have been transferred to calls and arrears, instead of what we have taken here, share allotment, share call, you can also use calls in arrears if the amount is being transferred. This is also accepted. See in the working note how to find out the amount to be transferred to capital reserve. Remember, you have to just first understand what amount is being received by the company. On 1,000 shares which was taken by X, 1,000 shares, 3 rupees is already been considered. See, amount forfeited per share of X, 3 rupees of amount is already been lying down with the company. This is representing your application money. So that is 3,000. How much was the reissue price? 2 rupees per share. So I will take that out, 2,000. So how much is remaining? 1,000. Likewise for shares allotted to Y. Remember here, number of shares which was taken from Y was 1,500 because the entire 1,000 was taken from X. 1,500 here you should not include the premium amount. So we are only taking 6 rupees. How is that? 3 rupees on application and 3 rupees on allotment. So this is 6 rupees taken. 9,000 is lying in share forfeiture. In this reissued only 2. So how much is remaining? 6,000 will be remaining here. So the total amount which needs to be transferred to capital reserve will be 7,000. So this entry will be done. Share forfeiture account debit to capital reserve. This will be your journal entry. The question is also asking us to prepare the extracts of balance sheet and notes to accounts. So extract of balance sheet, equity and liabilities, we'll have shareholder funds. Let's understand this in the working note. Total issued share capital is 50,000, out of which subscribed is 49,500. How are we getting? 3,000 was forfeited, 2,500 was reissued. So that 500 gap is already there. 500, and then we will add forfeited shares balance. Where are we getting this 3,000 from? Observe carefully, guys. Share forfeiture was credited by 15. Then there was a debit of 5,000. So if you literally observe 15,000 minus 5,000, 10,000 is remaining. But how much we transferred to capital reserve? Only 7,000. So there is still 3,000 which will be added to your capital balance. 3,000. Clear? Then there is reserves and surplus. Securities premium is allowed because you have collected premium amount on allotment for the remaining shares. Default was only with respect to 3,000 shares. In that also only 1,000 shareholders didn't pay the allotment money. So securities premium will come for that. Further details, share application for 50,000, share allotment is for 49,000 at 5 rupees including premium. Share call for 47,000 because total 3,000 shareholders didn't pay at 4 rupees, and then shares reissued 2,500 into 8. So this total is taken as your cash and cash equivalent, and the amount which has been transferred to capital reserve 7,000. Accordingly, you will take all of these details. See, total premium amount receivable in allotment, how much we are getting? 50,000 into 2 because this is the total number of shares. Amount reversed on forfeiture was 2,000. So the balance remaining is 98,000 which will go to balance sheet. That is how we are getting this 98. So all of these we will present here. Shareholder fund, share capital, reserves and surplus, and then cash and cash equivalents. I hope this is comfortably clear to all of you with respect to concepts. So this was your question number 5. Then last question. The balance sheet of Dynamic Limited as of 31st March includes the following information. 10,000 equity shares fully paid up is given. 1 lakh 9% preference shares, 100 each, rupees 70 paid up is given. Then there is capital redemption reserve, securities premium reserve, general reserve, balance with banks. Under the terms of their issue, the preference shares are redeemable on 31st March at a premium of 5%. So there is a preference shares. This is to be redeemable. Observe one thing. For redemption of preference shares, those shares which are fully paid up can only be redeemed. In this case, 100 is the face value, out of which 70 is only paid up. So first of all, the balance need to be fully paid up. Observe here, preference shareholders having 4,000 shares failed to make the payment for the final call made under section 55, because section 55 is the regulating section for redemption of preference shares. Their shares are forfeited after giving proper notices. Fine. In order to finance the redemption, the company makes a right issue of 10 lakh equity shares of 10 each at rupees 11 per share. That means it is issued at premium. 2 being payable on application, 4 including premium on allotment. So here 1 rupee is the premium, so 3 plus 1, and the balance on 1st June. So how do we derive at the balance? If 2 is on application, 4 minus 11, so 5 rupees will be the balance on first call. The issue was fully subscribed and the allotment was made on 31st March 2025. The money due on allotment was received on 31st March 25. The preference shares were redeemed after fulfilling the necessary conditions of section 55 of the Companies Act. You are required to pass the necessary journal entries with narration in the books of Dynamic Limited for the above. A very good question for practice, wherein it gives you a structure of the entire issue along with redemption of preference shares. So first, let's be very alert with respect to dates given here. The redemption is due on 31st March 25, and the company is also making a right issue. Observe one thing carefully. The balance, which is the balance out of this application and allotment, the remaining amount is taken on 1st June. They are asking us to pass the necessary journal entries. First of all, the money is required before 31st March 25 because the redemption is due as on that date. First, clearly understand this. So, keeping this in mind, let's analyze the entries. So, there were 4,000 shareholders who failed to make the final call. So, that means remaining 96,000 is first having their due and then making the call. Clear? So, we will have to pass the entry for this. First, we will make the entry due. What is the due entry? Share final call account debit to share capital. So 9% preference share final call to 9% preference share capital. Total number of shares was 1 lakh. 30 rupees was the call money. So accordingly, we'll get 30 lakh. In this 30 lakh, only 96,000 shareholders are paying. But before we pay, we will first show that as calls in arrears. So what will be the entry? Bank account debit for what amount we are receiving. So that is 96,000 shareholders into 30 rupees. That will be to 28 lakh 80,000. And then calls in arrears. This is 4,000 shareholders into 30 rupees, which is 1 lakh 20. 2. 9% preference share final call. Later, this shares were forfeited. So, what will be the forfeiture entry? Share 9% preference share capital account debit to calls in arrears account and to share forfeiture. So, the amount which has been transferred 1,20,000 with respect to 4,000 shares, 10 rupees was the face value. So, that has been taken care here. Sorry, this is not 10 rupees, this is 100 rupees. So 4 lakh total capital to calls in arrears and then to shares forfeited. I hope these three entries are comfortably understood. So after these shares are forfeited, remember one thing, there is no point in again reissuing the forfeited preference shares because ultimately this need to be redeemed. So we will not reissue it. The amount lying in the share forfeiture will be transferred to capital reserve. So the next entry will be share forfeiture to capital reserve. How much ever was there in the balance will be transferred to capital reserve. Clear with this? Next, for considering this redemption, the company is going ahead in making the right issue. So they are giving the breakup of application allotment. So we will have to pass the issue of shares entries. So what is the first entry for receipt of application money? Bank account debit to equity share application 10,000 in 10 lakh shares into 2 rupees. Then equity share capital to equity share application to equity share capital. Again the same transfer entry. Then equity share allotment to equity share capital to securities premium. There is 1 rupee premium. 10 lakh shares into 1 rupee. Then we will have bank account debit to share allotment account. So till here 31st March all entries have been done. Because remember, 31st March is the due entry for redemption. What is the balance collected on 1st June? We are not bothered about it. Clear? Next. So now we will have to find out how much amount is required for redemption purpose. Remember, 96,000 preference shareholders are there at rupees 100. So we will need how much? 9,96,000. See here, preference shares to be redeemed is 96,000 into 100. So 96 lakh. How much money I've collected from the issue of equity shares? 10 lakh shares. I've collected the application money. I've collected the allotment money. Here you will not include the premium. Be very, very careful here because remember section 52, only 5 purpose. Nowhere in section 52 it provides the point that you can utilize this balance for the purpose of redemption of preference shares. Clear with this? Yes. So 1 lakh into 2 plus 3. This is your application money and this is your allotment money. So that is 50 lakhs. Still balance. This balance required by creating capital redemption reserve. We can create capital redemption reserve only from the free reserve balance. The question is giving us the general reserve balance available. So first we will create the capital redemption reserve. What is the creation entry? General reserve account debit to capital redemption reserve. I hope all of you understood how we got this 46 lakh, from where this is coming. So later, now we have the all funds accumulated. We will now redeem the preference shares. First, we will make it due. So what is the due entry? 9% preference share capital account debit. There is a premium on redemption. So premium on redemption of preference shares account debit to preference shareholders. Due is for 96,000 shares. So 96,000 shares into 100. The premium is for 5%. So on 96 lakh at 5% will be 4 lakh 80,000. Then to preference shareholders. Then we will make the payment preference shareholders account debit to bank. At last, we have this premium which needs to be written off. There is pre-reserve balance given. So we can either write it off through general reserve or securities premium account. That is what is done here. General reserve account debit or securities premium to premium on redemption of preference shares. Now, if you observe this question, it is relatively easier, but there are literally a lot of entries need to be done. If you systematically understand, this becomes a very scoring question because this has been asked for 15 marks. Alternatively, the journal entries for forfeiture is also given, wherein, unlike you saw the previous question, if the amount is not transferred to calls and arrears, you can replace the respective accounts. Here, we have transferred the amount to calls and arrears, so we routed it through calls and arrears. You can also do it directly by taking call account as well. Clear? Yes. So the next part of the question is, what do you mean by principal books of account and what are the rules of posting journal entries into the ledger? Again, a simple theory question. Principal books of accounts, you have to write about your ledger and what are the rules of posting journal entries into the ledger? Let's observe quick points. See, after recording the original transaction, recorded entries are classified and grouped by preparation of accounts. The books which contain all sets of account, which is in the nature of personal, real, nominal, is known as ledger. Ledger is also known as your principal books of accounts since it provides full information regarding all the transactions pertaining to any individual account. So this you have to just give a snippet of what does the significance of ledger is, because that is your principal books of account. And they have asked the rules regarding posting of journal entries in the ledger. Just observe, you will know the simple basic points. You need not by heart what is given here. See, separate account need to be opened for posting, and then you have to clearly make use of the words to and by. You can reiterate these points. To will appear on which side? It is written on the debit side, and by will be written on the credit side. And the concerned account debited in the journal should also be debited in the ledger, but reference should be of the respective credit account. Meaning, for example, if I write bank account debit, how will I present it in the ledger? That is what they are reflecting. So you will read it as bank account debited to or by. So that is what they are interpreting here. So this is all about the rules regarding posting of journal entries in the ledger. So roughly the entire overview of Jan 2026 exam paper was pretty lengthier. Why? Because they have framed question, majority questions for 10 marks, which will definitely be a time consuming one. But all are pretty simple provided you have that conceptual clarity, and the practice of speeding up writing should be very, very precise. because the adjustment entries, especially when it comes to partnership, was not much trickier. If you know few minute points, it was pretty manageable. It was a very good paper for practice. Make sure you also go through the entire video once and literally practice sitting for complete duration to practice the entire paper. That is when you realize where you are standing if such papers is again reflected or touched. Hope you enjoyed this session. Anyway, I will share you this entire document in the description. Kindly find it out because I've made certain workings in this. So I will attach this in the description. You can download it, guys. Give your best effort. Prepare really well for your respective attempt, guys. Until I see you in the next video, keep working hard and all the very best. Take care.